Recording in progress.
So what's so important about news? Okay, as you guys can see, gold is consolidating because it is a holiday and market is moving slow. We're in this 2030 area, 2330, 2328 right now. You know, the buy that I called out yesterday hit 50 pips. Whoever took that buy, let me know from yesterday because it hit, 50 plus pips. It actually almost, yeah, it hit 2335 as well. It hit TP2, but I ended up closing my trade because I knew that was going to consolidate. So I ended up closing my position and I just took profits. I took the 50 pip profit and I was out. But right now, like today, like I said, I'm not trading. I'm not calling on any trades. This is pure just education. And by the way, just like how you mentioned in the video, you can use these calls. You can, take my trades. Like you can look at my trade ideas. Like use me as a tool. Use these calls as a tool, as a resource, okay, for your trading analysis. Don't just rely on heavily on taking every trade that I call out or taking every trade that we call out. Because like he said, sometimes you have to just separate from you gotta separate to elevate. I had to, I had to separate to elevate. I had to separate, for a little while so that way I can study, I can focus on my craft, I can focus on my trading, and not rely on other people's trade ideas. To become a professional in this industry, especially when it comes down to trading, you got to become independent. You got to be independent. You got to do things on your own. Sometimes you got to separate yourself from, from all the noise so that way you can stay locked in and focus in your strategy and your craft. So that way, as a trader, what are the areas you need to improve on. So that way you can sharpen your axe and you can put your head down and study and take your own trades based off your own analysis from what you learn from all the calls and all the videos and all the education. So important. I post a recording on my YouTube channel. Okay, it's called Grow with Carlos. I'll share it here, in a bit. It's called Grow with Carlos. I'll post all recordings on my YouTube channel. So, but yeah, guys, news, okay? News. So today, obviously, it's a holiday and, market is moving slow. It's June 19th. Tomorrow's Thursday, we have unemployment claims. Like always, like every Thursday, we have unemployment claims. And we have PMI on Friday. So I focus on the red folders, especially the red folders are high impact folders. Okay. High impact folders are red folders. Orange folders are medium impact. Okay. So I focus mainly on the red folders. Okay. Tomorrow we have unemployment claims. It's going to be a big day tomorrow because we can catch a bag. So when the numbers come out, whether it is, positive or negative, it's going to affect the price of gold. We're looking at the US dollar, USD. And I only look at US dollar because I'm trading gold. Okay. You look at the US dollar because it affects the price of gold. So when the US dollar it's an inverse correlation to the goals. It does the opposite. Not always, but it does the opposite. Typically, it does the opposite to what gold does. So tomorrow, for example, we have unemployment claims. If the numbers come out positive, then what do you think the dollar is going to do? Is it going to go up, or is it going to go down? Let me know in the chat. If news tomorrow comes out positive, will the dollar go up or down? If the news comes out positive on the dollar, will the dollar go up or down? Up, right? So when news comes out positive, the DXY goes up. And what does the gold do? What does gold do? Will gold go up or will it go down? Let me know in the chat. If the dollar goes up because it came out positive, what will gold do? Will it go up as well, or will it go down? Down. So news is just the excuse. So when the news comes out positive, the US news comes out positive, DXY goes up, gold goes down. Make sure you guys write that down. When news comes out positive, if it gives you a positive number, for example, tomorrow, if it goes from the previous numbers were 242. Last week, it came out to 242,000 unemployment claims. Okay, last Thursday. So last Thursday, it came out negative. And the dollar dropped and gold shot up. I can show you guys here. Last Thursday. Where is last Thursday? Last Thursday, right here. Boom, right there. This bullish hourly candle. Right here. Gold went up, dollar went down. We'll go to 30 minutes actually. So if tomorrow we see a positive news happening tomorrow, because they're predicting 235 tomorrow. 235. So it's gonna drop, which means that it's gonna end up positive news because it's unemployment claims. When we see a lesser number, it's actually positive because there's less people filing for unemployment. Okay. Which means that there's more people, that are employed. So it's actually going to come out positive. The lesser, when it's the lesser number. Okay. So they're forecasting 235 tomorrow. So if it comes out to 235, then it's positive, which means that the dollar will shoot up and gold will shoot down. However, when the US news comes out negative, DXY will shoot down gold will shoot up. It's just the opposite effect. So if tomorrow, if it comes out more than 242, if it comes out a greater number, then that's negative. Okay. And that's going to shoot gold up. It's going to affect the price of gold. And there are certain news that I pay attention to, such as unemployment claims tomorrow. Every Thursday, there's unemployment claims. So the more you guys study this, the more you guys backtest this, you guys will see it. You guys will see it. Okay, so go on here and go back to Thursday so that you guys can see what happened last Thursday. What happens every Thursday. This unemployment claims happens every Thursday. So that's one of the news events you guys can study every Thursday at 5:30 a.m. Arizona time, which is 7:30 Central, 8:30 Eastern. There's unemployment claims every Thursday. You guys can come on here in the chart. You guys can go back to Thursday. What happened at 5:30 Thursday, right here. Gold shot up. Right there. Right here. Okay. So it went up and then it came down and then it went up. And we can see what the dollar did as well. So let's compare it. The dollar and the gold. So when US news comes out positive, the dollar goes up, gold goes down. When US news comes out negative, dollar goes down, gold goes up. So when the US news comes out negative, it's positive for us. Because news is just the excuse. News is just the excuse. Okay. Meaning that it's whatever news tell you, it's all manipulation. If it gives you negative news, then it's positive in the markets. It's positive for gold. Okay. Just because you see that it's negative, it's going to shoot down. No. It's going to actually go up with gold when you see negative news. Because there are factors that depreciate the US dollar. And make sure you guys write this down. Factors that depreciate the US dollar. What are the factors? Okay. Number one, monetary policy, which is the Fed rate, the interest rate. That affects the US dollar. It depreciates the US dollar, which is the monetary policy. The Fed rate news, Federal Jerome Powell, whenever he does his speech, whenever they release the numbers, the federal interest rate, right now they pause it at 5.25, 5.5%. Right now, they pause the interest rate. So that depreciated the US dollar. Okay. That's a factor. Another factor is rising prices, or AKA inflation. That affects the US dollar. Another factor is demand for currency. demand for more currency. That affects the US dollar. Another one is economic growth, such as, for example, with crypto, Bitcoin shooting to the moon, AI and all this technology with crypto, Ethereum, Solana, all these projects, that's economic growth, which depreciates the US dollar, because when you see crypto rising, the dollar is depreciating. On the other day, we went over the US dollar index. And I also dropped the recording in my YouTube channel. How we talked about how the US dollar is losing value over time. It's losing its value over time since the 80s. It's been losing its value. It hit all-time high and it never reached to that all-time high again ever since the 80s. I believe it went up to 160 something, and then it never went back to that price again. It never went back to that higher high. It never created a new higher high. It never went back and created a new higher high. It just kept trending down over time, over the years. The dollar has been losing its value over the years because they're printing so much money. They're printing trillions and trillions of dollars on a daily basis. The dollar is losing its value because there's so much of it. But with crypto, the reason why crypto is so valuable and commodities are so valuable because it's a appreciating asset where it grows value over time. So economic growth is a factor that depreciates the US dollar. And another factor is export prices, exporting goods and services. Export prices is also what affects the US dollar. So let me go back. So I have my dollar on the right side of my screen and my gold on the left. So I'm going to go back what happened last Thursday, June 17th. Not June 17th. What is it? Where is it? My laptop is just running slow right now. And go back to Thursday. It was June 13th. Right there. And go here. Let me switch it to the 15-minute. So those are the factors that depreciate the US dollar. The monetary policy, which is the Fed rate, inflation, demand for currency, economic growth, and export prices. So whenever you see news that covers, monetary policy, interest rate, the unemployment claims, NFP, that is going to affect the US dollar. Hold on, guys. My laptop is just bugging. It's time for an upgrade, guys. I know it. Just give me a moment here. Just fix this here. But if you guys have any questions, let me know in the chat. If you guys have any questions, I hope you guys are getting some value from this call. But let me know if you guys have any questions. Like I said, today it's more of an education, Q&A. So let me actually go to June 13th here. So you have factors that depreciate the US dollar, and also you have factors that affect the value of a dollar. So the factors that affect the value of a dollar is supply and demand, market sentiment and psychology, and technical economic data. Technical economic data that affect the value of a dollar. So supply and demand, market sentiment and psychology, and technical economic data. Okay. Those are the factors that affect the value of a dollar. And we know about supply and demand. I hope you guys know that. Yeah, go ahead.
One more time, please. Supply and demand, and then technical what?
Yeah, supply and demand, technical economic data, and then market sentiment and psychology. Those are the factors that affect the value of a dollar. Which also applies to any market that consists the US dollar. Like all the pairs that consist the US dollar, it affects that. So like pairs like Euro USD, USD JPY, GBP USD, there's forex pairs that contains the US dollar, that has a US dollar, right? That has a pair. Whatever pair that has a USD, it affects it. Gold, right? As well, especially gold. So be mindful of that. Now, let me see, 5:30. Go back to 30 minutes. But yeah, guys, those are the factors that affect the value of a dollar. And there's supply and demand everywhere. Doesn't matter what market, what pair, what asset, supply and demand is there as well. Supply and demand has to deal is everywhere. Okay, that's how we know that whenever there's, including in businesses, there's got to be supply and demand. In the markets, there's supply and demand. So everywhere you go, anything that has to deal with money, there's supply and demand. So let me see here. Just bear with me, guys. But if you guys have any questions, let me know in the chat. If you guys have any more questions. June 12, June 13. Okay, there you go. Boom. I'm just marking the US dollar right now. here. Yeah, let me share my screen real quick. And then we have so on the right side, we have the US dollar, and on the left, I have gold. I'm looking at what happened last Thursday with unemployment claims. And that's right after the Fed rate as well. So we had the Fed rate, the Fed rate news last Wednesday, which caused gold to, to push up and then push down and then push up. Because we had CPI following federal interest rate, and that caused gold to push down. Before the push up. So we have unemployment claim here that resulted a bullish candle on gold here. Okay. And then we had unemployment claims, the US dollar shot down. You see how it does the opposite? And news last week came out negative. It came out negative. So it pushed the dollar down. And it shot gold up. You see how it does the opposite?
I have a question.
Yeah.
So as the news comes out, would you say at the same time this is happening, exactly the same time?
Yeah,
Like,
so whenever
uh,
yeah, so I was gonna say wait until after the news to trade. Don't trade as soon as news drop. So 5:30 news hit. Wait. Don't trade, as soon as news drop. Okay, like tomorrow, 5:30 Arizona time, there's gonna be unemployment claims. I'm not gonna trade at 5. I'm not gonna put in a position at 5:30 because it can go either way. It's very risky to trade right at 5:30 as soon as news hit. I will wait until after when New York opens, an hour after. I'll wait an hour after for an entry, or I will wait for the pullback. So if I see gold shooting up when news hit, I'm gonna wait for that pullback before I put in my position, because it always does that. You see for example here, you see how gold shot up and then it went down after news. That's the position you want to take. Okay, so you don't wait for the after news to take your position. Don't do it as soon as news hit at 5:30, 7:30 Central Time, 8:30 Eastern. Don't wait. Like, don't trade as soon as news hit, because it's very risky, because it can go either way. And it will also liquidate. Okay, because it's looking to liquidate.
so what I'm saying is, I'm just curious as is when the U.S. news, it comes out as negative, right?
Yeah.
If it comes out as negative, then you said that gold goes up.
Yeah, gold will shoot up.
So I'm
Gold will,
saying when you said that there will be a bullish candle, right?
yeah.
I want to know, would it happen as at the same exact time as the news is coming out, or you can anticipate that it's gonna go bullish. That's what you know what I'm trying to say.
Yeah.
Oh,
So yes, you anticipate that when if news comes out negative, right, and you anticipate that gold is going to shoot up, then yeah, it's gonna shoot up. If news comes out negative, the dollar shoots down, gold will shoot up. But wait until after news to trade. Wait until New York open to trade, pretty much. Because if you enter a trade as soon as news hit, okay, as soon as at 5:30, right, when news drop, they drop the numbers at 5:30, and you anticipate that gold is going to shoot up. Yes, you can enter that buy, you can capitalize, but look what happened after it went bullish. It dropped. You see right here with gold, it shot up because news came out negative last week, which caused the dollar to push down, but gold pushed up. And then look what happened at 6 o'clock, 30 minutes after the news, after they dropped the numbers, it shot down. Okay. So I will wait for the pullback. If you guys want to really capitalize on news, I will wait for the pullback. I'll wait for the pullback to enter the trade. Or if you guys want to be more on the safe side, just wait for New York open. Just wait for New York open. And just follow market structure. Price action, support, resistance. Just go based off of that. Don't rely solely on, on like whether the dollar is going to shoot up. Okay, that means gold is going to shoot down. Okay. Because you just never know what the market. Sometimes it goes the same way. Sometimes the dollar will shoot up, gold will shoot up. I've seen that happen before. So like I said, it doesn't always happen. Okay, like how gold and dollar, it goes the opposite. It doesn't always happen, but like it's typical. It doesn't always happen though. Like sometimes I see gold shooting up, and then the dollar's shooting up as well. Like it's going on the same direction. But sometimes you see something like this, situations like this, where it does the opposite. So don't rely solely on this. Use this. Yes, you can use this as a confirmation, as confluence, but don't rely heavily on this, okay, to take trades. Because again, it's especially with news, you want to trade after. You want to trade like you know, when gold pushes up, wait for the pullback down, because it creates an imbalance as well as its liquidity sweep. And then it's going to shoot down. Okay. It's going to shoot down because it has to balance itself. Now with the dollar, you see how it shot down because it resulted in negative news on the dollar, which caused price to push down. Okay, so it does the opposite. Now, that's something I wanted to cover real quick. And another thing as well, there's a website going over the Fed rate that I've been studying, and they send out like their predictions of what's going to happen with the interest rate, with the Fed rate. And this is so important to learn as well. Like Where is it?
Channel
CME.
check. It's there.
Make sure everybody's muted here. It's called the CME group. Let me scroll down. Yeah, CME Fed Watch tool, this one. So here they do like a whole prediction of what's going to happen of, with the Fed rate. And the probabilities and the numbers. This is the Fed Watch tool. This is the website, cmegroup.com. And this is where you study more about, you guys can study the numbers, analysis, and so that way you guys have a general idea of where the Fed rate is, going. Okay, so here, the next Fed rate news is July 31st. And they already predicted here that 89.7% of people are saying that it's going to remain the same at 525, 550 base points. And then 10% said that it's going to drop to 500, between 500 and 525 base points. Okay. Which is 5.25, 5.5%. So around that area, right? The probability, 89, almost 90% of people are saying that it's going to remain the same. So they're still going to pause it. Okay. Right now, currently is at 525, 550 base points. So that's for July 31st. Now let's look at September 18th, which is the following Fed rate news. 59% of people are saying that it's going to drop to 500, 525. So we're going to see a drop coming September. Fed rate. So September, later this year, we're going to see a slight drop to 500, 525. So that's a good sign because the target is 2%. They want to bring it down to 2% because the interest rate right now is way too high. So later this year, they're going to start, the probability is they're going to start dropping it. They're predicting that's going to drop. Okay. And how is that going to affect the dollar? Well, it's everything. It's going to affect the dollar because when there's low interest rate, do you think that the dollar will gain? Do you think they're going to still print a lot of money? Are they going to be printing? Are they going to turn on the machines and print more money when they drop the interest rate? When they drop the interest rate, do you think that they're going to turn on the machines and they're going to print more money? Or do you think that it's going to basically, is the dollar going to shoot up or is it going to shoot down? When they lower the interest rate, the target rate, the base points, will the dollar shoot up or will it shoot down? Yeah, it will shoot down because the target is 2%. The target is 2%. Okay. It will affect the dollar because, this is something that's also going to affect the price of gold. Okay, so 59% are saying that it's going to shoot down to 500, which means that they're going to, increase the, I'm sorry, the gold is going to appreciate. Gold is going to appreciate, gold is going to depreciate because, like I said, one of the factors is monetary policy. This is monetary policy. The factors that depreciate the US dollar is one of them is monetary policy. So what I'm showing you guys here is the monetary policy, which is the interest rate. So that's going to shoot gold up and then it's going to shoot the dollar down. It depreciates the US dollar because this is the monetary policy, which is the interest rate. So when we see that the economic growth, the demand for currency, this is part of the inflation as well. The CPI, consumer price index, monetary policy. These are the factors that depreciate the US dollar, which therefore appreciates the assets, commodities like gold. So we will see gold shooting to 2,500 plus because of this, right? Because of these factors. Now that's in September. We will see a slight drop. Now let's look at November 7th. What's the probability like? November 7th, they're saying that 50% are saying that it's going to remain at 500, 525 base points. And then 26% are saying it's going to go below 500, 475, 500. Okay, which is good news. This is good news for us because we know that our target is 2%. Let's look at December, 18th December. Okay, it's going to happen at the end of the year. Well, look, 44% are saying that it's going to drop below 500, 475, 500 area. That's going to be the target rate. 20% are saying that it's going to be 450, 475. 28% are saying that it's going to be 500, 525. Right? 5% are saying it's going to remain the same, 525, 550. 1% are saying it's going to stay at 425, 450. But majority are saying it's going to be 475, 500 to end the year. That's the probability. Now going into next year, it's going to drop even, like, let's see, January 29th of 2025. Let's see. Look at that. 35% are saying that it's going to be at 450, 475. 34 are saying it's 475, 500. So by the end of this year, going to next year, we're going to see a drop in the inflation, right? We're going to see a drop in the interest rate. So that's good. That's good news for us. So I'm optimistic about the future. So whatever they're saying, whatever the news are, whatever they're saying at the news, on the news, whatever they're saying, with all the economy is bad, this and that, we're on a recession, like with apparently, oh, there's gonna be another lockdown, like all these, it's just an excuse. Again, guys, news is just the excuse to instill fear upon us so that way we don't invest or we don't enter the markets or we don't put ourselves in a position to win because they're instilling fear. It's like they don't want us to win. Guys, the markets are meant for us to fail. Think about that. They don't want us to win. We're going against the big banks and institutions. Think about what happened back in COVID. Think about what happened when Bitcoin or crypto shot down, when all these assets shot down at these low prices. What was the outcome? It created new higher highs. It shot up, right? And I have proven fact of that. I have evidence and I have facts that it shot up right after COVID. Like Bitcoin hit to all-time high after COVID. You know, 2021 it hit what, 69,000? It went from 19,000 when COVID hit. It went from 19,000 to 69,000. Right? So people that understood, you know, what was going on with the economy, people that, you know, the wealthy people that that understood what's really going on, they started investing more. They started putting themselves in position. They started, you know, buying more assets. They started buying at the low. And they didn't pay attention to what the news were telling them. They didn't pay attention to what the news were saying. Even though it was negative on the outside, but you know, with COVID, you know, with all these negative news going on, you know, people in fear mode. Why do you think they say buy the fear, sell the greed? Buy the fear, sell the greed. Why do you think they say that? Because it's so true. You gotta buy the fear and sell the greed. You buy the fear. You buy when people are in fear mode, when people are in panic mode, when the market is going down, when it's on sales, right? That's the best position to buy right now. The best time to buy is when everything is on sale. It's like going to the mall. Everything is on sale. That's the best time to buy because you get the best prices. Same thing in the markets. When you see stuff on sale, that's the best time to buy because you get to take advantage of the low prices. So buy low and sell high. It's very simple, yet so misunderstood by most people. Because most people think that, oh, because of the market is going down, oh, it's crashing, this and that. They just don't understand what's really happening. COVID was a prime example of it. It was on recession, you know, but the market was going down, but the people that were in position, they started buying at the low. And then they capitalized and they sold and they cashed out and they took all the profits when it hit all-time high before another drop down. So they bought the fear and they sold the greed. And when the market started to shoot up, guess what the people did? Oh, they started to have that FOMO, fear of missing out. You know, they started to buy when there was already an all-time high, they started to buy. They were being greedy. And then, you know, but by the time they started to buy at the high, it was already too late. And that's when most people withdrew. You know, the 5% of people withdrew, they cashed out before the drop. And people that bought at the high, they're being greedy and they ended up losing because they bought at the high instead of the low. They bought at the high before the market dropped down, and they ended up losing money because they bought at the high instead of the low. So it only makes sense to buy at the low and ride the wave to the upside before the drop down. And you cash out at the high. That's the way to do it. And it's all a cycle. It's a cycle. The market is a cycle. Like, you just gotta follow the trend. It's all pattern recognition. It's a cycle. So like it happened again. Right? We had another recession. We had another recession going on. The market dropped and hit these low prices, and this is the best time to buy. Right? Such as Bitcoin, right? Bitcoin, it went down to 15,000. Well, back in December 2022, and I've seen it myself. I saw it. Like it dropped to 15,000 November, December of 2022. That was the opportunity to buy. And then look where Bitcoin's at right now. It hit a new all-time high, 73,000, 75, 74,000. 2 years later. So, and it's never too late. It's never too late. We're still early in this bull run, and it's not just Bitcoin. There's other crypto assets that you can invest at affordable prices. Bitcoin, leave that to the banks. Yes, you can buy portions of it, but don't only focus too heavily on Bitcoin, because there's other cryptos that are also valuable just as much, like Solana, Ethereum. Okay, but do your own research. Do your own research and really study this. Okay, because there are other projects that you can buy at affordable prices at the low that you can truly capitalize besides Bitcoin. So, but yeah, guys, I appreciate you guys so much. Thank you guys so much for being on. I hope you guys got some value. Drop some fire emojis in the chat. If you guys got some value. Drop some fire emojis. If you guys got some value, let me know. Let me know. Let me know. I appreciate you guys for hopping on this morning. I really covered, just basically news, the interest rate, some psychology, the 3 psychological trading mistakes. Remind yourself about that. Make sure you guys have a trading journal. Make sure you guys are really tapping into the education. Today was just education. Today I didn't, call any trades. Today, it's a holiday. Take today to study. Take time today to study and really developing your craft and working on your craft. Go back and watch this recording on my YouTube channel. I'm going to be posting all my recordings on my YouTube. So make sure you guys are on top of that. And if you guys need anything, I'm here. Just message me or call me. For those that have my number, you guys can also call me. You guys can message me. But yeah, guys, I hope you guys have a blessed day. I'll see you guys tomorrow morning. And let's go out there and make it happen. Let's go. Peace, family.